Here are 7 news stories from the world of the cryptocurrency industry. First, news. The German authorities confiscated 13 crypto ATMs. On August 20th, German police conducted a large-scale operation to combat money laundering, confiscating 13 crypto ATMs and seizing nearly $28 million. Raids took place across the country. According to Reuters, the police cooperated with Germany's Financial Supervisory Authority and the Bundesbank. Their target was cryptocurrency ATMs that operated without the necessary licenses, meaning they could have been used by criminals to launder illegally obtained funds. Representatives of BaFin have repeatedly stated that converting euros into digital assets or vice versa is a commercial activity. Accordingly, it can only be carried out in accordance with Germany's Banking Act. Unlicensed crypto ATMs could potentially be linked to terrorist financing and criminal schemes, said the supervisory authority, as they provide anonymity to senders and recipients of digital assets. Now, the operators of illegal cryptocurrency ATMs face legal proceedings and punishment. This could be a large fine or imprisonment for up to 5 years. Second, news. Bitwise claims that institutions continue to buy Bitcoin ETFs. The price of Bitcoin fell by 12% in the second quarter, but this did not stop institutional investors from significantly increasing their investments in Bitcoin exchange-traded funds, ETFs, the investment management company Bitwise reported on Monday. The biggest question in crypto right now is whether institutions and professional investors will invest significant amounts in crypto, wrote Bitwise Chief Investment Officer Matt Hogan. The report notes that the total number of institutional investors holding Bitcoin ETFs in the second quarter increased by 14% compared to the first quarter, from 965 to 1,100. The share of these investors in the total assets under management of Bitcoin ETFs also increased from 18.74% to 21.15%, Bitwise reported, adding that institutions ended the quarter holding $11 billion in Bitcoin ETFs. This is a great sign, Hogan wrote. If institutions are buying Bitcoin when prices are volatile, imagine what could happen in a bull market. Bitwise addressed criticism that Bitcoin ETFs are mainly owned by retail investors, a claim it calls simply false. It noted that these ETFs have been adopted by institutions at the fastest pace of any ETF in history. Most ETFs gain momentum over time, and it is expected that inflows into Bitcoin ETFs in 2025 will be larger than in 2024, and in 2026 larger than in 2025, according to the report. Institutional involvement is growing, the report says. Wall Street giant Goldman Sachs reported that it held positions in 7 out of 11 Bitcoin ETFs in the United States, according to a 13F filing submitted earlier this month. Third, news. A class action lawsuit has been filed against Binance. 3 investors have filed a class action lawsuit against the cryptocurrency exchange Binance and its former CEO Changpeng Zhao. They claim that the platform is partially responsible for the digital assets that were stolen from them earlier. According to court documents, consumers allege that they suffered financial losses due to the exchange's neglect of anti-money laundering regulations. As explained by legal expert and chief legal officer of Consensys, Bill Hughes, the lawsuit is a logical continuation of the indictment in the U.S. Department of Justice and Commodity Futures Trading Commission's case against Binance. These plaintiffs and the group of American consumers they represent had their crypto assets stolen as a result of hacks and fraud. These funds were sent to Binance for laundering, and the exchange knew about it. The plaintiffs claim that Binance caused them harm because it was a key element in the money laundering scheme, Hughes emphasized. According to the expert, the plaintiffs' representatives are well-known lawyers with experience in litigation against large companies. Additionally, he pointed out one of the lawsuit's claims. If it were not for Binance, on-chain data tracking would have given the victims a chance to recover their funds since blockchain technology is transparent. Hughes noted that further consideration of the lawsuit in court could set a dangerous precedent. Other companies involved in cryptocurrency analytics could also be at risk. Fourth, news. An analyst predicts an explosive Bitcoin rally. A well-known analyst in the cryptocurrency community, Plan B, expects that the price of Bitcoin will soon increase fourfold from its current levels. At the moment, Bitcoin is trading at $59,697. Based on the forecast of the creator of the stock-to-flow model, Plan B, by the end of the bullish cycle, the value of BTC will soar to $240,000. Repeating the success of 2017 and 2021. According to Plan B, the price of Bitcoin has historically increased fourfold when it exceeded the 200-week moving average. This metric is a widely used technical analysis tool that helps identify long-term trends for cryptocurrencies. The 200-week moving average is also often used to determine whether the market is in a bullish or bearish trend. Typically, when BTC rises above the indicator, it signals potential price growth and a continuing bullish cycle. When Bitcoin falls below the 200-week moving average, it indicates that the bullish trend is not yet confirmed. However, Plan B pointed out that even during the powerful bullish rally of 2017, the price of Bitcoin temporarily fell below $4,000. By the peak of the cycle, the value of BTC had risen to $17,760. A similar situation was observed during the next bullish market. In November 2020, the first cryptocurrency by market capitalization was trading at $15,560, and a year later, at $69,000. Plan B's analysis shows that even within a strong trend, short-term corrections can occur, leading to the price temporarily dropping below the 200-week moving average. However, if the long-term prospects are indeed strong, the cryptocurrency's price eventually returns above this line. History rarely repeats itself, but often rhymes. If Plan B's analysis is correct, then the recent Bitcoin surge to $73,750 does not necessarily indicate the peak of the current cycle. The bullish rally likely still has not exhausted all its possibilities. There is no bear market here. Plan B's position contradicts signs that the cycle is nearing its end and a bear market will soon begin. However, the analyst is not the only one who believes that the crypto winter is still far away. Head of Research and Options at BLOFin, Griffin Arden, believes that the weak performance of Bitcoin and other cryptocurrencies does not suggest the end of the bullish cycle. Judging by the options market indicators, traders expect that the reversal of carry trades and the substitution of liquidity caused by a rate cut will impact the crypto market's performance in the short term. Nevertheless, traders are generally optimistic about the medium and long-term performance of cryptocurrencies, which is completely different from the expectations during a bear market, Arden said in a comment to Be in Crypto. The expert also added that the implied forward rate for BTC is higher than the risk-free rate. During a bear market, the situation is usually the opposite. This indicator often reflects bullish and bearish sentiment among options traders. BTC forecast. The above analysis is also supported by the Bitcoin selling risk ratio. This indicator compares the total value of spent coins with the realized market capitalization. A high selling risk ratio often signals a decrease in investor confidence in the future of the asset and increased market volatility. A low ratio suggests that the risk of selling at a significant loss is relatively small. Such conditions usually precede the beginning of a new bullish cycle. According to Glassnode, in March, the Bitcoin selling risk ratio decreased to 0.16% from 0.71%. This strengthens the belief that the current trend may have enormous growth potential. At the moment, the cryptocurrency is close to bottoming out. Even if Bitcoin does not reach $240,000 at the peak of the cycle, the bullish market is still in its early stages. However, if selling pressure increases, the coin may experience another correction. Fifth news. Binance prevented $2.4 billion in fraud losses in 2024. From January to July 2024, the security system of the Binance cryptocurrency exchange prevented potential fraud losses exceeding $2.4 billion. The company managed to protect over 1.2 million of its customers worldwide from losses, according to a blog post by Binance. Platform representatives noted that user security is a priority for Binance. To prevent hacks and cyber attacks, the company employs its proprietary risk management mechanism, which combines artificial intelligence tools and manual specialist checks. The report states that this mechanism includes 8 levels of fraud control on Binance. The system detects and flags suspicious transactions, providing reliable protection for customer funds, according to the release. User orientation has always been a key priority for Binance. It underpins the industry's leading technological tools and processes that allow us to protect our customers and their assets around the clock, said Binance Chief Technology Officer Rohit Wad. According to the team, suspicious transactions are most often detected in outgoing transfers when criminals attempt to withdraw the funds of potential victims. However, attackers continue to develop new hacking methods, so work on improving the security system is ongoing. Although Binance implements comprehensive measures to protect client funds and accounts, users are strongly advised to follow certain rules. We urge you to remain vigilant and take responsibility for your own security. While our team has implemented extensive measures to protect your funds, ultimately, users' actions play a key role, added Rohit Wad. In addition to protecting its own platform, as of July 31, 2024, Binance has preserved over $73 million in user funds stolen from third parties. The company emphasized that it will continue to innovate and strengthen protection measures to ensure a safe environment for all users. 6. News. Tether authorized the issuance of 33 billion USDT. On August 20, 2024, the company Tether, the issuer of the stablecoin USDT, authorized the issuance of another 1 billion coins on the Tron network. The company's chief technology officer Paulo Ardoino noted on X that the volume of stablecoins based on Ethereum has been authorized but not issued. According to him, this means that it will be used for further issuance or swaps between blockchains. Analysts at Chain noted that over the year, the firm has replenished reserves with 33 billion USDT on the Ethereum and Tron networks. It should be noted that the current market capitalization of USDT is nearly $117 billion, reserved over 73 to DeFi Llama. USDT's market dominance is 69.49%. 7th News. The Brazilian regulator approved the second Solana ETF. The Brazilian Securities and Exchange Commission approved the second ETF based on the cryptocurrency Solana. The new derivative will be issued by the Brazilian company Hashdex, which manages digital assets worth over $962 million, in partnership with the local investment bank BTG Pactual. The fund's name and the start date of trading its shares are currently unknown, as it is still in development. The regulator approved the creation of Brazil's first Solana ETF on August 7, giving the green light for the issuance of the derivative to QR Asset and Vorx. However, the B3 stock exchange has not yet allowed trading of the cryptocurrency fund's shares, so they have not yet appeared on the market. Brazil has proven to be one of the crypto-friendly countries where Bitcoin and Ethereum ETFs were issued several years before this happened in the United States. Brazil, along with Europe, is distinguished by its friendly attitude towards exchange-traded products based on digital assets, stated Palisade co-founder Matt and Dave. The approval of the Solana ETF in Brazil did not have a positive impact on the Solana price, which fell by 18% over the past month. It seems that the coin's price will rise only after the start of trading in fund shares, if they attract a significant amount of investment.